Hey everyone, welcome to today's video in which we are going to try to understand how much revenue AMD will be able to bring in for 2026. And the easiest way to do that is try to go backwards from the number of chips AMD will be able to manufacture. But how do we actually calculate how many chips AMD will manufacture next year? Well, one of the easier ways is to try to understand the supply chain and one of the critical manufacturing steps on the AI GPU chips as we talk about them. So AMD is really dependent on TSMC, as is Nvidia and Broadcom and the others in this space. And TSMC has this very interesting packaging concept of chip on wafer on substrate, CoWoS shortly. And these CoWoSs come in different variants, CoWoS S, the main one I believe, CoWoS R and CoWoS L for even the larger chips. Now for AMD's entire allocation of 2026 would be around 88,000 CoWoS wafers. Those 20,000 will go to AMD CPU EPYC server lineup, and the rest 68,000 will go to the AI GPUs as we know them. So let's try to calculate how much those 68,000 CoWoS wafers will be in turn related to number of GPUs and how many billions of revenue AMD will bring in based on those numbers. So we now know that AMD will have around 5,600 CoWoS wafers on a monthly run rate by end of 2026. So the big question is then how many chips can AMD manufacture for each of those 5,600 CoWoS wafers? So my quick number is around 21 MI GPU chips, be it MI300s, MI355X or even MI400s, since they are roughly in the same kind of area in terms of total chip size. So now let's try to understand how that MI300 looks like. So we can start with the main building blocks, the XCDs. This is where the AI magic happens, and MI300 has 8 of them. Each of them are around 115 square millimeters. And then we have also the IO die, and remember that the XCDs are stacked on top of the IO dies. So we have 4 IO dies and each of them has 2 XCDs on top of them. And once you have this package, you add them all on an interposer. So this entire system that becomes the final MI300 that we talk about, which is the huge package of around, I believe, a couple of thousand square millimeters once you're on the actual interposer. I believe, you might correct me in the comment section, but I believe the gray or the dark blue part on the bottom is the actual footprint, which is the probably close to the size of the interposer. And that would be in the area of around 2,500 square millimeters, which is actually the limit of the TSMC CoWoS S current capability. They say explicitly here that it's around 2,700 square millimeters, which is perfectly in line with the size of MI300. So we have 2,700 square millimeters, and we know that each of those CoWoS wafers can have around 70 to 75,000 square millimeters. And once you remove the edges in the actual cutting process and all the manufacturing steps, you're probably looking at around 60,000 square millimeters of actual chip space for the interposer. So that is how I arrive at the number of 21. I take 21 times 27, account for let's say quite high yield. If you reduce that number, let's say to, I don't know, 18, then you would get around 100,000 MI300 chips by end of next year, or equivalents I should say, because by end of next year, AMD will manufacture mostly MI355Xs and more importantly, MI400. Let's actually stick with the low number there at 18. So let's also change that number for 2025, see how that looks like with the yield that is slightly lower. You can see here that AMD should have around 1.1 billion of MI300s of run rate by end of this year and 1.6 billion by end of next year. Now, you might have expected a bit more, and to be honest, I myself have also expected previously a bit more in that regard. And we know that Lisa Su is talking about tens of billions of AI GPU sales at some point in the future. She hasn't specified exactly when, but she mentioned it on, I believe, past couple of months. So I would argue that 1.6 billion in revenue monthly run rate by end of next year is not that bad. It's almost 5 billion for a single quarter of Q4 of next year. So now that we know that, let's quickly look at Nvidia numbers. You can see Nvidia should have an allocation that is roughly 10 times more, maybe closer to 8 times more. They would be able to make around 700,000 of those every single month. The reason Nvidia will make fewer than AMD per number of wafer is because the package of B200 is actually a bit larger than MI300. So that's why I would assume, let's say 15 to 16 per single wafer. But in any case, you can see that Nvidia's revenue would be around like anywhere between 12 to 17 billion monthly run rate, give or take. Now that we know AMD potentially will make around 1.1 billion by end of this year on a monthly run rate, and maybe 1.6, 1.7 by end of that next year, and that also is dependent on the average sales price. I think I'm a bit too conservative, so there's a potential that AMD will be able to sell the chips at 25, even 30,000 per piece, since MI400 is supposed to be much more competitive, especially when you are talking about larger models and training. Because remember that the issue with MI300 has been that on a single GPU basis, they are really competitive with Nvidia. But once you connect them together like 10, 20, 100, multiple thousands, that's when Nvidia runs with it, with the networking and connectivity between the chips. And MI355X will be a step closer, but the big final push will be by MI400 in my opinion. So how does AMD's data center revenue look like from now on until end of next year? We can see that in the blue bar, I divided the data center revenue in the blue for the AI GPUs, and on the red for the server CPUs. Now I should maybe remove that MI300 because again by end of next year it's going to be more advanced chips, successors to MI300, but in any case Instinct sales. You can see that the EPYC sales are actually going really strong step by step, like slowly growing. But the Instinct sales, once they started by Q4 of 2023, they're growing at much faster pace. I do say that this dip that you can see on the blue bars from last quarter of 2024 and first and second quarter of this year is due to the fact that MI300 is a bit long in the tooth. And if you actually look at AMD's, ramp up of the successor to MI300, I have that model here. You can see 2023 starting with MI300, probably peaking at around last year in Q4, then ramping down on MI300 as we ramp up MI355X, which Lisa Su said is even faster, or like much multiple times faster ramp up than MI300X. So I'm already assuming that MI355X will sell around $1 billion in Q3 for a combined $1.75 billion of revenue in Q3 of this year, ramping up even faster in Q4 of this year to around 2.6 billion. And what does actually all these numbers mean? Before we look at the margins and stuff like that, you can see that again, the same thing happened by second half of next year or end of first half of next year, in which, the MI355X should theoretically peak around beginning of the next year and start to ramp down, and then, ramping up MI400X, which assumingly would be ramping up even faster than MI355X. But you can see that the revenue starts to become substantial by end of next year. Now I should update these numbers because I think the ramp down on MI355X should be faster. So my end of 2024 number will be more like 5,000, maybe 5 billion here, and should maybe be around 4 billion here, and so on and so forth. So I will update this table later, but let's go to the actual revenue numbers now and the margins, because the most important thing is to turn this revenue into margin, right? So we can see that AMD's gross margin over the past couple of years, it has been around, let's say, high 40s to very low 50s, right? Until Q2 of 2025, in which they had a one-time off single write-down due to the 800 million of export-related charge, in which they were not able to export those chips that were planned for China. And that has obviously since then been reversed, but we don't know when those chips will be sold, in already this quarter, next quarter, or even spread out across the next 4 quarters. But in any case, that gross margin of 39.8 is not representative. You should calculate on, let's say, 50% or so. Now, if you look at how much AMD's gross margin improved, let's say from Q1 of 2023, in which they had 44%, and 2 years later they had 50% gross margin, and the revenue went up from 5.3 billion to 7.4 billion. So roughly 40-45% increase in revenue, and they went from a 44% gross margin across the company to a 50% gross margin. And I see that the revenue growth will be much faster already now. So my end of 2026 number will be around almost just shy of 14 billion in revenue, more than half of it coming from the data center, client segment, AMD is really hammering Intel right now on the, the laptop market and APUs and such stuff. They are like completely eating into Intel's market share on the mobile side, like, on the laptops, Dell, Asus, HP, and so on and so forth. And also on the gaming side, they're giving Nvidia quite tough competition finally on the gaming GPU side. Then in addition to that, we obviously have, the PlayStation 5, the successor to that PlayStation 6 that starts to be, in the rumor mill. We also have the embedded one, the FPGAs, this segment, if you're not new to AMD. This is, for example, where they help the SpaceX with their satellite communication. This is also life science, like in medical devices. This is where AMD is excelling at. Although it's been quite low due to the automotive drop over the past 2 or 3 years. I think it's gonna pick up by end of next year for sure. And they have quite nice margin on the embedded one. So summarizing all of this, you can see that I'm calculating a gross margin getting close to 57-58% by end of next year. And that would mean, let's say, earnings per share every single quarter in and about $2 or $3. Let's say $2 every single quarter on a like GAAP earnings, a non-GAAP based, once you remove stock-based compensation and a few other bits and pieces, maybe 2.3. That's very close to $10 earnings per share for a company like AMD. And looking at the stock price, so if you're telling me you're gonna buy a company that will, by end of next year, just let's say 14-15 months from now, be able to do anywhere between 8 to maybe 11-12 run rate of earnings per share across a whole year, and you're gonna pay $158 for that company, that's like in the high end of PE ratio, let's say if you're assuming 8, just below 20 times. So let's say, if you're assuming $8 run rate by end of next year going into 2027, that's our, PE ratio of 19 or something. But if you, let's say there's another growth, into 2027, and then once MI400 is actually showing that, for real AMD is something to be counted on, maybe by mid next year, we have a updated CoWoS table for 2027, and AMD will go from 88 to 120, or I don't know, even more, 200, right? That's possible for sure, because I think if the market sees that AMD is capable, and there's some, indications out there, looking at Mark Zuckerberg, how he's talking about AMD, looking at Elon Musk recently. So I think the stars are aligning for absolute gargantuan 2027, a year that I still have not calculated on if you look at, the revenue. But I mean, for sure, I think there's huge possibility if this AI market continues. And from what I understand, looking at, for example, what Lisa Su also recently said, that this is a 10-year cycle. And nothing that I see out there points to the fact that it's going to be, a 2 or 3 year cycle. I think this is just the beginning of it. We are starting to see AI applications beyond even imaging, starting to make videos that are to a such level that you might think about how creative it can be, helping with you producing everything you possibly can imagine. So I think this is just the start of things. And I know by any means mean that by 2026 we'll stop growing. So I think AMD will grow well into 28, 29. So I for sure think that, if you look at the revenue and the projected earnings per share, I think this stock is way too cheap. Honestly, I would pay, if someone told me you're gonna have a company that's gonna, double their earnings per share almost every 18 months, and this company is within tech, and they are, the underdog, they have a lot of market share to capture, and they're obviously, already slayed a titan on the other market, which is the server CPUs and the general purpose CPUs, with a really, really strong R&D team, quite lean, to be honest. I think this is way too cheap. I honestly say that this company should, at the bare minimum, be traded at 50 times earnings. For sure, I absolutely would pay 50 times earnings for AMD. And based on my own numbers, even let's say they drop off quite substantially. If you look at, again, my model, you can see that for 2026, I calculated that the earnings per share will be $6.5, right? So if you take $6.5, 6.42 times 50, that's $321 stock price. And even then, at 50 times earnings, I wouldn't say that AMD is so expensive, because for sure in 2027 and things look and into 2028, they would by end of 2028 probably double the earnings per share again. So then this company is, my opinion, too cheap. So this is my advice at the moment. I think it's quite realistic based on the CoWoS numbers that we have on hand. I would, like, if you asked me 2 years ago, I would expect it a bit more now. I would expect that AMD's CoWoS allocation would be like maybe 20% of what Nvidia has, rather than, let's say, 12, 13%. But in any case, we are moving in the right direction. So just be patient, and yeah, please like, subscribe, comment in the comment section. I really, really would appreciate if you subscribe to the channel, try to help me and grow more and try to put more energy into this. And yeah, thanks for your time, and see you in the next one.